Hey everybody, I'm Mike DeSepoli and welcome to the Ask the Advisor show. Ask the Advisor is brought to you by Heritage Financial Advisory Group. And this week in episode 93, we're going to talk about fear and greed in the marketplace. Now you may be wondering, what do two polar opposite emotions have anything to do with investing? And the answer may surprise you. The fact is, emotions have so much to do with individuals' performance when it comes to investing. And as we know it, emotions account for most bad decisions that people make. Now, why is that? Because people have a very hard time watching a situation unfold and doing nothing. They feel like they have to take action because they're feeling some sort of pain or jubilation or anything in between. So I want to break down a couple items here today about how fear and greed drive much of the action in the stock market. So what happens when markets go down, right? When the stock market starts to fall, it makes a top and it goes down 2%, 5%, 10%, what happens to people? They get scared. And when they get scared, they feel compelled to do something. And more often than not, the thing that they feel compelled to do is sell their investments. And if history tells us anything, that is the worst possible time to sell investments. You're selling into a pullback in the market and you're acting specifically and only based on fear itself. And when you look at the other side of the coin, we talk about greed. What does greed have to do with the markets? Greed tends to show up in the markets after a long run where a lot of profits have been made, and investors want to reap additional profits, and maybe they take on undue risk to do so. So this happens at times when perhaps you're at a party or you're at a social function and somebody is talking about the latest greatest investment they own and how they made just big massive profits on that investment. Now in fundamental reality, the likelihood is that the run up or the profits have already been made in that stock, but people's inner emotions drive bad decision making. So what happens is they get greedy, right? And they want to either, if they already own that stock, they want to continue to hold on to it longer because they think, well, you know what? I'm up 50% and that's great, but I really want to be up 100%. Or if you don't own that investment at that time and somebody's telling you about all the money they're making, nobody wants to hear about the party they're not invited to. So what do? They run out and they buy that investment when the likelihood is most of the profits have already been made in that stock. So what we implore people watching this show to do, what we talk to our clients about, what we preach here in our office, is you really have to have a balance between these two emotions, and we try to be counterintuitive with how we deploy action around these emotions. So for example, when everybody in the marketplace is running scared and they're selling investments hand over fist because they are just terrified, that's a time that we look to be greedy. Okay, we look for values in the marketplace. We look for stocks that have fallen way too far and way too fast to be justified at their current price levels. And we look for value. We look for things that are selling at a steep discount because the market has not priced them accurately because people are just panic selling. On the other side of the coin, we look at greed and we see when markets are getting too high or a particular investment has run up a long way, we have a very big profit in that investment, we look to take our profits and move on to something else. We have a saying here in the office, you never go broke taking profits, but yet for many people, it is very difficult to walk away from a winning trade. And this is no different than people when they go to the casino, right? A few episodes back, maybe I think episode 68 or 69, we talked about the hot hand fallacy. Someone's having a good run at the blackjack or the roulette table and they never walk away because they think the winning will continue. So what we implore investors out there who are watching this, you never go broke taking profits. If you own an investment and you've had a good ride in it, don't be afraid to take some money off the table. We're not saying you have to sell the whole investment, but you could sell a piece of it and you lock in your gains. And on the other side of the coin, the next time the market goes haywire like it is right now, don't get scared. Don't sell just for the sake of selling or just for the sake of doing something. Okay, if you have a fundamental reason to sell, if the stocks that you're following have materially broken down and the actual fundamental data says it's time to sell, by all means go ahead and do so. But don't sell just because the media tells you to or because you fear panic, you feel fear, and you feel all these different types of emotions that go along with the wild swings in the marketplace. So that's all we have for you here today. We just wanted to break down the balance between fear and greed so you can make sure you don't let it bleed over into your portfolio. Thanks so much for tuning in. We'll see you back next week for episode 94.